So happy Tuesday.
Happy Tuesday.
So we are Insights over Espresso, and I'm here with Michael O'Brien from Siol Venture Capital, a new pre-seed venture capital firm with a rather unique specialization in public affairs and policy. Good morning, Michael, and welcome.
Good morning.
In our earlier conversations, you successfully bridged the world of public affairs with venture capital. We don't see a lot of folks doing that. And can you walk the listeners through that journey, how your background in government relations, particularly with MOB advocacy, shaped the founding of Shield Venture Capital?
Sure. It really it seems strange looking at it, but once you hear the story, I think it's makes a lot more sense. So I started MOB Advocacy to really focus on startups and early stage tech. It was, just before Uber, Airbnb, where startups in regulatory markets, really startups seemed to be avoiding those markets outside of healthcare. And there was really seemed like a need for someone in that space. And so I started MOB Advocacy. We had a bunch of clients in that space, but the big hurdle that we kept hearing over and over, not only from our clients, but people that we wanted to work with, was, hey, as good as you guys are at what you do, and we were among the best firms in the country for what we did, founders still needed money. So kept hearing, we need money. And oftentimes, especially the later that it got, we would hear, without money, what you do doesn't matter. And so I was in a position to divest from start Shield and create a place where we could marry that political capital with actual capital. And that's where Shield was born.
Okay, excellent, excellent. So with that, it kind of leads right into you have a unique value proposition.
Absolutely.
Capital with public affairs expertise. And so how does this dual focus translate into a competitive advantage when sourcing deals and providing hands-on strategic value to your early stage founders?
Yeah. Myself and our venture partner team, who are all involved, we know regulated markets, whether it's healthcare, energy, environment, transportation, dual use, GovTech. We have people with that expertise to help kind of shepherd founders through that. We invest at the pre-seed stage where founders need the most help, where assistance like kind of having your own lobbying shop, having somebody to provide that strategic guidance, being that Sherpa, is the most advantageous to founders. And we've seen that traction pay off. We've had founders hold rounds open for us to finish close. In fact, we have a few of those now, just kind of, we're trying to push close to make that happen, but we've had founders hold rounds open far longer than they should, because our expertise matters. A founder doesn't want to have to go out and spend $100,000 a year on a lobbyist. If we can do that, and we don't want them to go out and spend $100,000 on a lobbyist, we'd rather go to market and build
Yep.
your tech. So if we can alleviate that, having that come along with our capital goes a long way.
Great. So Shield's mission, we spoke about in our pre-conversation, is to build great companies that solve global challenges. So beyond the financial return, how do you measure the success and real world impact of your portfolio companies against that, what I'd say, rather ambitious mission?
Yeah, that's a great question. We're not a true impact fund where that's one of our direct measurables, but we do that when we select companies that we invest in. Our LPs certainly have that as an interest of theirs, but as I said, we're not a true impact fund. So it's not something that we measure and report on, but it's something that myself and our venture partners think is really important. So, I think venture is meant to solve big problems.
Okay.
And so it's more of kind of the part of the ethos that goes into how we select, rather than something that we really report on. It's not
Yeah.
a mandatory reporting requirement for us.
Okay, that makes sense. So how does Shield leverage its public affairs knowledge to identify and invest in startups that might be overlooked by generalist funds, particularly those navigating complex regulatory landscapes.
Yeah, absolutely. We see regulation as alpha, not as friction, and so we look for those opportunities, and that is definitely part of our criteria. One of the questions on the list that we have to answer when evaluating companies is what is the regulatory, legislative or regulatory problem that needs to be solved, and can we solve it? And so that's one of those questions that is critical to our decision mechanism. And so it's, like I said, our team is well versed in legislative and regulatory work. And so we look for those questions. And if we can help it and impact uh, those challenges, then, that company's got a chance of moving on. If it doesn't, like, I tell founders we don't work in molecules because of the FDA process is something that we can't change. It's there. It's
Yep.
not changing. But a lot of other regulatory hurdles we certainly can. And so we make those decisions founder by founder, startup by startup.
You mentioned when we spoke investments like Vanadium, so blockchain for data centers, and Go Pursue career pathing for high school students. Can you elaborate on how, a company like, let's take Go Pursue, which addresses job scarcity and career paths, fits into the global challenges thesis alongside deep tech like nuclear? And I know you already said, hey, it's not a emphasis, but you are looking at, can you make an impact?
Sure. Just look at how often higher ed was in kind of the public sphere in those discussions over the last couple of years, whether, it was student loans and, jobs are always an issue, whether it's federal, state, local. Elected officials are always looking at jobs and how do you keep talent local. And so that's definitely a piece of that. When we first started looking at Go Pursue, the National Governors Association had just launched a big jobs program. And how do you find those companies that are hiring non-degree candidates? Governor Moore had just removed college as a requirement for a lot of state jobs. So it was an issue that government leaders were taking on, and Go Pursue was there, ready at the forefront. And the head of NGA at the time was Governor Polis, who certainly, as one of the founders of Techstars and an entrepreneur himself, certainly understood how startups and entrepreneurs could help solve that problem. And so we could start that dialogue.
Good, nice. Research points us to what I'll call a seed squeeze, where investors are demanding more revenue traction. Given Shield's pre-seed focus, what core metrics, if any, or even non-traditional signals do you prioritize or look at in a founding team and their vision when revenue is still nascent?
Yeah, sure. I consider Shield true seed, and with definitions being clouded and blurred lately, we define that as startups who are pre-revenue up to $1 million in revenue. And so we really try to stick to that early focus. And so for us, the team, the founding team and the founder is certainly more than half of that metric. We spend a lot of time with founders, kind of evaluating, working with, making sure that the fit of Shield and that founding team is good, because it could be a 3-year relationship, could be a 7, 10, 12-year relationship. And we want to make sure that happens. Second, we look at traction. Obviously, revenue is a great sign of traction. But beyond that, we look for founders who took the time to talk to customers and potential customers and kind of walk through that lean startup process of customer discovery and can present data that, hey, while we don't have revenue, we've got a pathway to revenue. We know what we have to build to sell to these people. And so that's critical. Third, we look at market, make sure market has a venture return. And that's difficult, especially when you're looking at founders who are selling kind of into a new market. Market research can show you so much, but sometimes if you're looking at it at a new market, that market research might not be there. And so kind of trying to dig in and figuring out what that is can be difficult. But those three of the four, and then tech, if it's deep tech, we dig in and have somebody look at it. SaaS software like Go Pursue, we're going to expect a founding team to be able to figure that part out. That's how we evaluate startups.
Nice. That leads into my next question, which is when we first spoke, you emphasized that the biggest time sink is getting to know the founders, as
Absolutely.
no founder is the same. And I tend to hear that a lot. What specific qualities or homework do you look for in a founding team that signals they are the right ICP for Shield, long-term, high-touch partnership?
Yeah, absolutely. Coachability, resilience are certainly key among those. Yeah, I think the entrepreneurial journey is one of the hardest jobs anybody can ever take on. And so we look for founders who have what it takes to go from beginning to end. Certainly an ability for us to get along and kind of see eye to eye, or try to see eye to eye, to be able to communicate and understand each other is important. Like I said, this might be as little as 3, as much as 12 years that we're going to spend together. We want to make sure that we understand each other and that we like each other and that we have kind of a shared vision of where this can go. And so we're not butting heads for the next 10 years, because I don't think anybody wants that. Those are things that we can only learn by spending time with founders. And so we try to spend as much time with founders as we can.
I agree. So you noted that operational complexity and relationship-driven fundraising are major time sinks when we spoke. If you had a magic wand to automate one part of your deal sourcing funnel, say from initial discovery to first contact, which part would provide the most immediate high leverage benefit to Shield's deal flow?
To kind of cut out the absolute no's. We get a lot of deals that we know we're not going to fund, whether it's wrong stage, which is, especially with those blurred lines, probably the biggest issue. Kind of founders not understanding what value we bring, and just because they're in a regulated market doesn't mean we're going to be the right fit. And so, kind of finding the absolute no's would be great. Although separating the absolute no's is also the easiest part of our decision-making process.
Okay.
The absolute no's, the absolute yeses that we're going to dig in on, that we're going to fund, those are the easy ones. That it's that middle ground is, we like the founder, not sure about the market, or, those questions, those take up they always take up the most time. I think no matter what relationship driven process you're talking about. And so
So
solving the absolute no's would cut out the biggest number of founders, but it
okay.
doesn't necessarily save a whole lot of time for us.
Okay. So you mentioned a desire for founders to articulate why Shield is a good fit for them. So how much time do you estimate you and your team spend manually filtering pitches to find that? And it kind of ties into what we just spoke about, to find that synergy, and what impact would automating that initial alignment check have?
Yeah. I mean, that's a great question. I personally probably look at 200 deals a month. Of that, I'll bring to our team maybe 5 or 6 of those, and we'll have a discussion. We'll do a deep dive on maybe 2 of those. I would say certainly more than half are easy no's. And so there's 2 every month that I'm like, yeah, we're definitely bringing this forward. And then it's a numbers game. Out of 75, what are the other 3, 4, maybe 5 that get through to a broader discussion?
Wow.
We're still fundraising, so I probably spend 40% of my time kind of working with founders and going through that. And so, probably 10 to 20 hours a month kind of going through that middle chunk of founders.
Yeah. Wow. I didn't realize that numbers were that I'd call skewed, 200 to 5. That's what, 2.5%. So you confirm using generative AI for market research and memo generation. How much time do you estimate this saves your small team weekly? And how has this efficiency allowed your investment professionals to focus more on strategic high impact work?
Yeah, I think that's a great question. Time it probably hasn't saved a whole lot because it's probably something we would have had to outsource. Market research isn't any of our first expertise, so we probably would have had to have an analyst or somebody brought in that could do some of that. And
Okay.
so certainly saves resources, the cost of hiring, or whether that's somebody on the team or a contract. I think a huge savings, a $5 million fund where those fees don't go a long way. To be able to hire somebody is a luxury we just don't have right now. And when we go out and raise fund 2 and fund 3, that'll be a different story. We'll be able to have some people on the team that can do that. But at a $5 million fund, it's not there.
When you look at AI, you're going to compare outsourcing the traditional way to leveraging AI. AI can probably, I mean, you're outsourcing it to a human versus AI
Mhm.
that can do so much more. I mean, a human can only work, we have to sleep so many hours, AI can keep at it.
Oh, yeah.
So I always see AI, and I'm not saying AI is 100% accurate, still because of the fact that it can 24 by 7, 365, it can keep going. You're still going to be able to churn through that much more data.
Absolutely. So it does go through a lot faster. It does make that decision process a little faster. But in terms of thinking directly kind of my time, we would have handed that off to somebody,
Right. And
which is for us would be a huge cost. AI is significantly less expensive, where we're getting the data not only faster but a lot cheaper, which is great in terms of being able to manage the costs of running a small firm.
so given the sensitive nature of financial decisions these days, how do you build and maintain trust with both LPs and founders regarding the use of AI in Shields operating system, especially when looking for outliers rather than patterns?
Yeah, great question. We use an open source AI that we brought in and loaded a lot of information in internally. So our AI tool that we use to help evaluate founders, that we kind of plug our numbers into, is not open to the public. It's a closed system.
Okay. So we've seen a lot of VCs use Decile Hub,
Mhm.
Affinity for VC operations. Are there any specific AI solutions other than the one that you just mentioned that you are actively evaluating or planning to implement next to address, the administrative or lead sourcing challenges you've identified?
Yeah. We use Decile for Fund 1, and there are a lot of built-in AI tools into that. They also have a large language model that we can ask questions on, kind of how to run. If we have questions about process, we can plug them in there and get some answers. We don't run our decision tool through that, although they have one in their system. We run it through our own process, uh, just because we have different questions that we wanted to ask, and different things that we wanted to measure, and we wanted to make sure we were measuring based on our information and not off of somebody else's. And so while we use some other AI tools, I also use kind of Marbleize in terms of helping evaluate potential LPs for things that are critical in terms of need to protect the information on founders and actual financial information of LPs. We go internally.
Okay. So for emerging VCs or fund managers listening, what would you say the single most critical piece of advice you would give them about differentiating themselves in today's very competitive, efficiency-focused market?
Yeah, that's a great question. I think it's competitive on both sides, both LPs and founders. I tell founders all the time that we need them more than they need us. Without great founders, we're not going to get those LPs to invest in mediocre companies. We get LPs because we find great companies. And so it's competitive on both sides. In terms of differentiation, I think LPs, just like I see a lot of founders every month, I think if you're a traditional venture LP, you probably see not as many, because there's definitely less venture people than there are founders, but you're seeing a lot every month. And so differentiation, the ability to show an LP why you're different, why you're going to make money, why you're going to be a good steward of their capital is definitely critical. VCs, just like we create portfolios that are diverse uh, to protect against losses, LPs also have kind of a portfolio of investments where they try to be diverse. They're not going to invest in the same kind of VC every single time, because they're looking for diversity. They're looking to protect themselves and find those outliers as well. And so that differentiation piece is really important.
Noted. So, Michael, thanks for sharing such valuable insights. Where can our listeners learn more about both Siol Venture Capital and follow your work?
Sure. Siol Venture Capital, SIOL.VC. We're on the web. You can also follow me on LinkedIn. There's lots of Michael O'Briens out there. But if you plug in Michael O'Brien and Siol or Michael O'Brien and MOB, usually I'm the top person that pops up. Feel free to connect and reach out. And
Good.